Hello everyone, hope you're doing well. So today we have to start with our key terminologies, key areas where we are going to see some of the people who are related to an audit. And these terminologies are going to help you a lot when you are going to study the quality management areas. That is a very precise area for AA, but in AAA, this will be a very significant portion for you. So if you are focusing it on right now, it will be helpful for you in the future as well. Okay. Engagement partner. Engagement partner is basically the auditor, the person who is working on your organization as the auditor. The key person, the partner of the firm. At a firm, audit firm, there are levels: associate manager, senior manager, then junior partner, and senior partner. So if you are at a partner level position, you can sign an audit report. Okay, you can sign an audit report. If you are eligible to sign an audit report, you are called an engagement partner. Engagement partner is basically the person who is working on the client. Client is basically the organization that is being audited. Okay, he is responsible to oversee, manage the complete audit procedure, and in review the complete audit proceedings by the junior staff. So in the end, the responsibility of the audit is on the engagement partner. Anyone who will be held liable here will be the engagement partner because he's the one who is signing the audit report. Now let's see. Now the reference is either 220. The engagement partner is the auditor who is responsible for the overall audit engagement and the audit report issued on behalf of the firm. So firm is the company, the audit company. So I'll write it down for you. Audit company will be referred to as firm. And your subject company or the client company or our company under inspection will be your client. Okay. Whenever you read client, understand this is the company that is under inspection. And whenever you're going to read the word firm basically means the audit company. The engagement partner is the partner at the firm as a senior member of it. A partner at the firm is responsible for leading the audit and signing the audit report. So if he's signing the audit report, he has a responsibility to oversight it, to check it, that everything is going on point. And in the end, he will be the one responsible if there is something that is supposed to happen and has not happened in the appropriate way. Okay. So this person holds multiple accountabilities, such as the audit planning and risk assessment, supervising the audit team, ensuring compliance with auditing and ethical standards, and final review and signing of the audit. So first of all, planning. Planning is the area where you are assessing the client. You are assessing whether the client is eligible or in a position that we can work upon them. Should we engage with them? Should we work upon with them? Should we allow them? Should we allow them to be our client for the next year? Because there are multiple areas, such as if you are having, let's say, leave audit aside, if you have worked in any area of job or any place in the world, whenever you are meeting a new person, you have some criteria set. Yes, that we should, whether we should let them be with us or not be with us, whether it be a client or a personal relationship, we have some boundaries, we have some set rules that we follow. So in audit as well, there are some set rules due to which we are considering whether to work on this client or not. Should we accept this client or not? So that are to be considered here. Other than that, in planning, we are assessing the level of risk the company carries. Risk of what? Risk that the financial statements are going to be misstated or could have error or could have some fraud in it. The higher the risk, the better it is not to take the engagement. The higher the risk, the better it is not to take the engagement. Why? Because ultimately the engagement partner will be held accountable if he gives a wrong opinion. His audit risk, the risk of a failure in audit will increase. So I'll try to establish a relation and I will continue this relation with you guys because this is very important. When we reach the audit report, you're going to see that how acceptance of a client and audit report and audit opinion are based on the risk. How are we going to plan the particular client if the risk is higher? So I'm writing a relationship here that when the risk is higher, our audit risk is also higher. The client's risk is high, so that means the audit risk is also high. So we will try to reduce the audit risk. We will try to keep the audit risk at the minimal level. Okay. Then supervising the audit team is just raw tools. You have to supervise them, allocate them, assign them to particular areas according to their expertise and their particular domains. Ensuring compliance with audit and ethical standards. The ethical standards is a very key component that we're going to study in this complete syllabus. And you have expectation of reasonable questions coming in ethical domain. So we have to see whether the audit committee or audit team or audit workers are in the position in which what they are working, in which they are working in accordance to that standard that is set by the IESBA. Okay. Next, final review and signing off the audit. When all the audit procedures, the activities are done, there is a final review of the audit. Why is it possible? Why is it that we are doing a review? Why is it the possibility that a review is conducted of the complete audit when we have done a complete inspection of the entity? Is for the main reason that when an audit is conducted, we are going to check that if any person that has worked on a slight area or any area has made a mistake or not. If we have assigned a junior staff to a very significant risky area, that means that that area might have a very high risk. That area might have material misstatement in that particular domain. So we have to identify the areas of weaknesses when you are having review. Why? So that we can reduce our risk of audit. So objective here is to reduce audit risk when you're reviewing the audit proceedings. Every activity is monitored by the partner, but in the end review helps us identify the loopholes that are to be fulfilled before the audit opinion has been formed and see whether the opinion that you established is correct or not. If there is something significant that is to be changed, we will change it first and then issue an audit opinion, not before that. Okay. Now, responsibility include promoting the culture of quality throughout the audit. Maintaining quality basically means maintaining a reasonable level of due diligence, care, skepticism, an open mind, no biasness. Keep everything according to the standard, according to the book. Ensuring that resources assigned are appropriate and sufficient. Resources by that we mean employees, we mean the documentations, we mean the timing allocated, everything is given in sufficient manner. If we have a very extensive audit team, but all are juniors, is it an appropriate or sufficient staff or resource? No. We should have some senior staff as well, so who can guide the junior staff. If we are giving them 1 month to conduct an audit, is it enough? No, it is not. Time constraints is a very big red flag for you. Okay. So now in the new days, the red flag and the green flag is a very common terminology. So the red flags are basically the areas that are giving you a hint something is wrong. The client is trying to do something. It is an indication. And the green flags are that these things are positive and we should move forward. You definitely would know that, but trying to reiterate to you. Then direct involvement in significant risk areas and key decisions. Direct involvement in significant areas and key decisions. That means the audit partner should be responsible to have a say in the risky areas. Higher the risky area, more the experienced staff, more the eligible or competent people should be placed there. More resources should be allocated there so that the risk can be reduced and audit risk can be reduced as well. Okay. As we have seen that audit risk and client risk is directly proportional. So we will have a very clear view that if we decrease the audit risk, we will have a better outcome of the audit. Now, I'm continuously talking about reducing the audit risk. How can we reduce audit risk? If there is a significant risky area, leave audit aside. How can you mitigate or reduce the risk? If something you have 100 files in front of you, how can you reduce the risk of error in them? Check all of them. That means increase your work. Yes. How else can I reduce the chances of error? I can deploy more staff, tell them everyone to check it, or appoint senior staff for the purpose of the inspection. So these are the main areas basically that are done by the auditor as well. The auditor does things exactly how we have discussed. They increase the staff, they apply more open-mindedness, no bias is used. The staff that is present is deployed in more numbers. The time taken is more longer. We increase the work. We check every file instead of just a sample. So these are the things that auditors also do to reduce the risk. This will help us in reducing the complete risk of audit, that is the risk of giving a wrong opinion. Now moving on, ensuring that ethical and independence requirements are fulfilled. Ensuring quality review procedures are performed where required. Quality review procedures, work done is reviewed. Work done is reviewed. Basically, by this I mean that the work that we're doing is reviewed by a senior person so that there are no errors present, no errors present within the work and can be detected timely basis, not stretching it to the end. Okay. Now, if we are looking at an example, in the audit, ABC Ltd, the partner of Mr. Usman, reviews the significant risk of revenue fraud. The significant risk of revenue fraud. So there's a risk of revenue fraud. Discusses with the team and the key audit matters. Ensures that a second partner performs a quality review. So you see here that what are you doing? You have communicated that fraud risk to everyone. Everyone in the audit team knows it, that there is a risk of fraud. So will they be more alert regarding this fraud? Yes, they will be. So this is an indicator that our audit risk can be reduced. Next, he is ensuring that a second partner, another partner comes in and performs a quality review. He is checking the work done so that another opinion can be gotten from a third person who hasn't been a part of the audit. So that when we are giving opinion, we can say that yes, we have gotten checked, we have done the appropriate procedures that was named by the second partner, and all the things that are done are satisfying the quality assurance standards that are to be followed. Okay. And signed by the audit opinion. He remains responsible even if the tasks are delegated to junior staff. The main auditor of ABC Limited is responsible for the audit work and opinion, even if he has given the work to someone else. I hope this was clear with you. Now, moving on to our professional judgment. Okay. Now, professional judgment is basically a judgment by the management, by the management of the audit firm. So professional judgment basically refers to the judgment used by the auditors on the client areas of risk or estimates. Okay. Judgment is basically a area of your professional knowledge. Basically, I'm giving a judgment regarding something. Getting the level of understanding I'm getting from the third parties and evaluating it. I'm listening to them. I'm understanding what can be done. What can be done. What should have been done and what can be done is the basically difference between the experience a person has. Okay, let's take an example. If you are riding a bike, if you're riding a bike, you see a distance between two cars, okay, and you drive your bike through them. If you succeed, you will be proud that your judgment was accurate. But if you get crushed between those two cars, your judgment was wrong. Now, judgment comes from experience, and judgment is basically the application of knowledge, experience, and the training the auditor has on the client. Now, I'll give you another example in relevance to the audit. Let's say if I am working in an organization, if I am working in an organization, now the organization has basically a revenue. The organization has a revenue. Revenue means their sales. Now, the sales that are being done, should every sale have an invoice and should they have a series? Yes, they should. Now, I am seeing that there are 100 sales and only there are 95 invoices. Now, in my professional judgment, can I say that the 5 invoices that are missing are the risky areas? Can I judge? Can I judge that this is an indicator there is a fraud being committed? Yes. Now, judgment is basically the level of understanding that you develop in your previous years and understand evaluating and appropriately applying it on the context of the relevant assertion or relevant area of assessment. So mainly the judgment areas are materiality, setting a limit in which we are going to accept misstatements. The judgmental areas are at what point we can say that yes, this thing is true and fair. At what point we should not work further. Or at what point we should say that this is a very risky area, this is a problematic area. What is the point? What is the appropriate level of resources applied? These all are included in the judgment areas. If I see that 3 months are enough for an audit, that is my professional judgment. I'm judging that yes, 3 months are in. It is an estimate. Judgments can be wrong. Judgments can be wrong. Please be very aware that whenever your judgments are used by the management of the client company or the auditors, they can be wrong. They can be changed because every person has a different view and different judgment regarding certain areas. Okay, let's say some people will find audit assurance very easy for them because they have a perspective that theory is a stronger area of them. But some people might think this is a difficult subject because they have a very low relation with theoretical subjects. They don't like theoretical subjects. But I'll show you that if you study the course according to the planner, inshallah, it will be very easy for you. You will pass this exam. Okay. So moving on with professional skepticism, that in my professional judgment, now in my professional judgment, a person who has studied the complete syllabus, watched the lectures, and attempted the practice tests and mocks and the practice questions that are given, he will pass the exam. Can my judgment be wrong? Yes, it can be. Can it be right? Yes, it can be right. How have I developed the judgment? By previous experiences, by my knowledge, and the training that I have gone through to teach this particular subject. So all the areas combined are going to develop a professional judgment from my side. Now, some other person comes in, his judgment might be different. So there is a variation in that. Now, professional judgment is the application of relevant audit knowledge, experience, and training in making decisions that are reasonable and appropriate in the context of audit. Now, the key application is that assessing materiality and risk, deciding the extent and nature of audit procedures, evaluating audit evidence, especially when estimates or assumptions are involved. When the other party is applying estimates or assumptions, you have to check whether your judgment is correct or not. You have to apply a judgment and whether these assumptions are correct or not. Okay, I made an assumption that these notes are more than enough. Your work is to apply your previous knowledge, apply your experience, and assess whether this assumption that I made is correct or not. So that is your professional judgment. Next, forming an audit opinion. So if we're looking at the audit opinion. This is basically a judgment by a judge in the court. A court gives a judgment based on the evidences he obtains through the procedures he orders. So same as the auditor. Auditor gets to an opinion by obtaining evidence from the work that is done by his subordinates, by his employees, by the people working with him, and he forms the opinion of whether the company is giving a true and fair picture or not. So that's audit for you. The most important point is that must be free from bias and based on relevant audit evidences, should be documented clearly, especially where significant decisions are made, and should be guided by audit standards but tailored to each situation. Now, biasness is a component that can hinder the quality of an audit. Now, if you see in a court, there are multiple cases where some judges are being biased to a racial community. So, based on the race, there are discriminations based on a particular action by a person. There are some biasnesses. So, the judge is told again and again to be unbiased, not to be giving a judgment just based on the other party's relationship, other party's incentive, other than what the factual figures are showing you, what the factual amounts of factual evidences are showing you. Don't go beyond that. Okay, so bias is a killer of quality. We have to make sure of it. Then documentation is the basically the documents of work that we have done. The work that we have done should be documented, and documented work should be assessed by our audit reviewer so that he can make sure everything is on point. And the audit standards should be the guidance area of the audit. An example, an auditor evaluating a management estimate of useful life for a factory machine must apply professional judgment to decide whether a 15-year estimate is reasonable based on the industry standard, machine usage, and maintenance records. So useful life is of an asset. How many years are we going to use the asset is a domain where we are having significant estimates. So the auditor has to judge whether the condition of the machine and the industry standard is 15 years, or we should reduce it or increase it according to the situation. It will affect you how? It will affect the depreciation. It will affect the value of the asset. So these judgments are going to affect two areas of financial statements. So it can be a significant one. Okay. Now moving on to professional skepticism. What is professional skepticism? Professional skepticism is basically an area, a domain, where you are applying significant knowledge of your understanding or your significant experiences in entities. Skepticism is basically being a person who is having too many doubts on the other party. Always keep a doubt the other party can hide something. Okay. Now, the management is not a friend. The management are the people who have worked the complete year on in an entity. And in the end, there might be situations where they have gone wrong and they will try to hide it from you. Even if they are your best friends, they will first save their own jobs. So their own job is saved by hiding the things that are wrong. So you have to keep your open mind. You have to be alert. You have to be skeptical. You have to be questionable. You have to critically evaluate everything that is in the financial statements. The other party tells you that we made a sale of 1 million rupees. You ask them what is the proof that you have sold for 1 million rupees. Please show me the proof. You have to check the proof whether it is correct or not, whether it is original or not, whether it was a fake or not. You have to take 2 to 3 more documents from different sources so that you can verify that the document presented to you first is true and fair or not. And other documents are to be cross-verified that they are matching the original document or not. So skepticism basically means keeping a very alert mind, being very sharp, being very alert, and being very questionable. Question everything the management tells you. Now, being skeptical doesn't mean that you are going behind the management, you're going against the management, you are accusing them of fraud or misstatement. You're not accusing them, you're just questioning them. You're making sure that nothing is there that is problematic. So, your work here is that you have to be skeptical, be questioning, and just get the evidences. if you are saying that the management is wrong, they are conducting a fraud, they're hiding something, you are basically kicking them away. But in the end, you have to be very careful. You have to be very aware of the consequence that the evidence documentations are to be provided by the management. Management is going to provide you with the particular documentations. So you cannot kick them away. You just have to question them, ask them that please, can you give me this document? If you have a 1 million sale, please give me the supporting documents. Please give me this. Ask them for things. Be questioning, but don't be judgmental. Don't be rude to them. Don't be rejecting or blindly going against the management. They are not against you. They are not your competitors. They are just a questionable party. They are basically not even the accused, but we what we say is not guilty until proven. So prove they are guilty, prove that they're guilty by taking obtaining documentations from them, but not considering them guilty, not distrusting the particular client company. So let's read it. Professional skepticism is a mindset that involves being alert, questioning, and critical throughout the audit. It means not taking information at face value, not taking information at face value. Like in front of my face, if you see that this is a very nice person, but on the other side, I can be a very aggressive person depending on the situation. I'm not, but I'm just giving example. If many of you would have seen Breaking Bad, in Breaking Bad, Walter White, the main character, was a very nice guy, very down to earth, very shy, very scared guy. But on the other hand, he was a drug dealer. So there are variances where you are going to be facing it. So be very alert regarding it. Just don't take everything at face value. Actively seek corroborative evidence. Actively seek collaborating evidence, some evidences that are supporting the main document that is provided to you, the main thing in question, remaining alert to signs of fraud, manipulation, or bias. So this is a main concept that we should not don't we don't need to discuss. Role in the audit is inconsistencies in explanations. If you are working on in an audit, you have to see the inconsistencies in explanation. I am saying that my sales has increased. My sales has increased, but my cash didn't increase. So is it a logical thing that my cash sales has increased, but my cash has not increased? It is not a consistent explanation. So there is a risk of fraud here. Challenging, unusual, or aggressive accounting treatments. Someone has reduced the useful life of an asset by 10 years. It is an aggressive accounting treatment. How have you done it? What was the reason? What was the commercial acumen? What was the reason behind this particular significant change? You have to get an evidence for that. Ensuring audit evidence in both sufficient and appropriate manner. So, sahi evidence is required. Some common misunderstandings that we carry along with ourselves is that professional skepticism is not the same as distrust. It is a balanced caution, neither accepting or nor rejecting the information blind. Not accepted nor rejected. Just ask for any additional evidences. Okay. Okay. The example is the management claims an obsolete inventory for rupees 1 million will still be sold at full price. The auditor exercises skepticism and requests recent sales records or market demand analysis to verify the claim. That if you're saying that the sales has uh, decreased or the units that are sold for 1 million are obsolete, please give me the corroborating evidences. Please tell me what basis have you made this claim. Okay. Moving on to a last area, that is materiality. Materiality is basically, in simple words, a line. If you cross a line, you are considered material and we will assess you. If you are below the line, we are not going to hinder you. It is not important for us. Materiality is a concept that it is a misstatement, it is an error, or materiality is the amount on which the economic decision making of a particular person or particular consumer is going to be hindered. Okay. So materiality is the area where you are seeing the other party might be affected by it. Let's say 100,000 is the amount that I will be affected by. So my materiality will be 100,000. 10,000 is not an area that I will be very worried about. So that is not a set of materiality for me. So materiality is the area where the economic decision making can be changed by of a shareholder or an investor. Let's say a bank has to give you loan. and a financial statement have a fraud in them worth of 1 million. Is it material to them? Yes, it is, because this will change the economic decision of giving you a loan. They are not going to give you a loan because there was a fraud of this significant level. Okay, so materiality is a separate topic that we are going to discuss in very detail, so no need to worry about that. A material misstatement. A misstatement is material if it could reasonably influence the economic decision of the user of the financial statements. Materiality helps in focus the audit work on significant balances and transactions. Focus on significant balances and transactions. This line is basically the significant area. If you're exceeding this, the amount is significant. This line helps you in identifying what is significant and what is not. Decide which misstatement requires correction and tell the management to correct it, and form an audit opinion based on whether the amounts of material significant or insignificant. If it is insignificant, the audit opinion will be different, but if it is significant, it will be different. Now, there are types of materiality as well. There's planning materiality that is made on the start of the audit. The performance materiality in mid audit, and specific materiality for specific areas where amounts are low, but their nature is very important for us, where nature is very significant for us. So based on benchmarks, planning materiality is set. Performance materiality is a lower or reduced materiality level from the planning materiality. So planning materiality is higher and our performance materiality is lower. And aggregation of risk from undetected misstatements. Performance materiality helps us in detecting low level risks or lower risk that can accumulate and form up a higher risk. Okay. Then we have our specific materiality applied on sensitive areas. Now, materiality can be both qualitative and quantitative. That means it can be based on amount or the nature of transaction. Nature of transaction means it is a very risky transaction, or quantitative means the amount is very huge for us. So examples are, if a profit is of 10 million, a 600,000 misstatement is material. If 10,000 error is not disclosed, it is a material nature transaction. So materiality nature can be discussed by these factors. So you have to be very vigilant regarding these areas. So we'll keep it till here. In the next class, we'll continue. That's all from my side. Thank you so much.